investors are holding onto their optimism on the first trading day of the new year. That after President Trump passed tax reform just before last year closed out. You know, he rolled back regulations on a number of industries such as coal mining. And all this seems to be having a pretty good effect on the Dow Jones Industrial Average and what's going down on Wall Street. Take a look. It was nudging past 100 points up a little while ago. It's kind of been seesawing a bit and nudging up against that magic Dow of 25,000. Probably will get there at some point. Art Laffer joins us. He's the former Ronald Reagan president, economic advisor. Art, good to see you.
Good to see you, Eric. Happy New Year.
Happy New Year, too. I mean, it seems pretty optimistic on Wall Street. There's a lot of attention on the tax changes. But tell us a bit about regulatory reform, because that is something the president has been really zeroing in on.
Well, regulatory reform has been quite exceptional. I mean, he's had all of these executive orders which have really changed the regulatory environment dramatically. You know, he got rid of the mandate, which is an enormous benefit in the tax bill. He's also withheld the funds for the insurance companies, the subsidized insurance companies, which all it does is pump up the price. That's all subsidies do. And so he's done a really great job on all of that. Now, the tax bill is my favorite, as you might imagine, Eric. What he's done there is just out of sight. It's better than we did with Reagan in the first year, by the way. It's a lot better.
Well, but critics say it's a giveaway to the corporations, to the rich, to the top 1%. You know, how do you answer that?
Well, let me just say that going from a 35% tax rate to a 21% tax rate, for every dollar you earn, at 35%, you get to keep 65 cents. At 21%, you get to keep 79 cents. That's a 21% increase in the after-tax return on investments. So obviously, these companies that have potential investments are going to invest like mad. Those companies that don't have good investment opportunities, they're going to give the money back to employees or to shareholders in stock buybacks or dividends and let them do the investing for them. So it's really a red herring, these people saying, well, they might keep it and spend it or pay buybacks. That's silly. This will really increase investments, output, employment, and production, and also reduce the tax sheltering and all these lawyers and favor grabbers and lobbyists are doing. It'll reduce all of that as well. I just think this is the most wonderful bill imaginable that could be passed, and he's done it.
You know who seems to agree with you? I mean, surprise, surprise. Front page of the New York Times. Hey, did you see this? I'm going to read you the lead column on the left-hand side of the New York Times. Actually says this about President Trump. Quote, a wave of optimism has swept over American business leaders, and it's beginning to translate into the sort of investment in new plants, equipment and factory upgrades that bolsters economic growth, spurs job creation, and may finally raise wages significantly. The president has declared that rolling back regulations will be a defining theme of his presidency. Did you ever think you see that in the New York Times? I mean,
no, I didn't. But, you know, the New York Times historically used to be really great. They were against the minimum wage. They had the best single editorial, I think it was 86 or 87, on why there should not be a minimum wage. They've historically been really very, very good. I just don't know how they've gotten a little bit off track here. But they'll come back on track, Eric. You know, they're a good newspaper, and they'll come back on track, and they've got great writers there and great thinkers.
Yeah, I mean, what do you expect, for the economy? We see the Dow near, right over my shoulder. There it is. I mean, almost, hold on, there it is. Just nudging up to 25,000. And you really think that this will all translate to us? That we will have more jobs, we'll have more money in our pocket, and we'll see this certainly by the midterms.
Yeah, the people who currently don't have jobs, they're going to find jobs. Now, most of those people are going to get the low-level jobs that aren't really the high-paying ones, but they will get jobs that they otherwise didn't have. Those people who do have jobs will get higher-paying jobs, more responsible jobs, and that, too, will happen there. So both of these groups together are going to be much, much better off. Now, that may not lead to an increase in the median wage because of all these people getting jobs at low pay, but it's great for the economy. It's just what we did under Reagan. And, you know, what's happening now, I think they're going to see growth going above 3% for this coming year and maybe above 4% for the next year. And you're going to see all sorts of prosperity. And I hope the stock market continues. But, Eric, up to now, it's up enormously. What, from 19,000 to almost 25,000, as you say?
Yeah.
That's a huge increase.
You think quickly that you will beat Ronald Reagan's record at the end?
Well, he could well beat it. If he goes in the full 8 years, he could well beat it. He's surely beating it in the first year in office.
All right. Art Laffer, good to see you.
And I love Reagan, as you know. They're better than
numbers
anything.
Right there. We'll see. Well, it's down a little bit, but we'll see how it goes. All right, thank you.
Thank you.
It was